You're listening to the Unlocking Africa podcast.
Started in core technology, where I worked in the corporate world. Started out life with Alpha Aquitaine in Nigeria, where I did seismics with them. There were two primary components to any commercial enterprise: the proposition and the organization that delivers. It's a two-way street, because once you take their money, they're your partners. So you want to know as much as possible about an investor before you pitch them. It's a country with immense potential for business growth. By carefully planning and adapting your approach, you can achieve that success. Others have and continue to do so.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we find inspirational people who are doing inspirational things to unlock Africa's economic potential. Today we have system analyst turned public speaker and author, tech strategy advisor and angel investor, Tomi Davies, also known as TD, who is also Collaborator-in-Chief at Technovision, co-founder of the Lagos Angel Network and president of the African Business Angel Network, not forgetting member of the board of the Global Business Angel Network. Welcome to the podcast, TD. How are you?
I'm exceedingly well. Thank you very much. And thanks for having me.
How was that for an introduction?
I halfway recognize myself in it. But
Brilliant. I know we've been having this conversation for quite a while. Change of dates, clash of schedule, but we finally got here. So it's great to have you on the podcast. Mm-hmm. Not sure if you've listened before.
Of course.
Fantastic. That's great to hear. So, as usual, I like to start from the beginning. So I was hoping you can just give us a little bit more information about TD, also known as Tomi Davies.
Well, I think the first thing I enjoy about me is the fact that I've managed to make it to grandparenthood. So I enjoy being a grandfather.
Congratulations.
Yes, thank you very much. To me, that's sort of the crowning glory. I've had the privilege of being married to my wife now. We're going to be celebrating 40 years next year. So
wow.
Her hanging around me for that long is saying something. And we're privileged to have three beautiful children to show for our relationship, and they're all doing amazing things across the world. So that's sort of on the personal front. On the work front, my background is started in core technology, where I worked in the corporate world. I started out life with Alpha Aquitaine in Nigeria, where I did seismics with them. Now people are talking about AI. Then we were using AI to find oil, essentially. But then my dad died, so I legged it out of Nigeria and came back to the UK, where I joined M&S. And within a short period, became the head of IT research and had the privilege of building the very first Marks & Spencer website. I actually registered marksandspencer.com.
Oh, wow.
Yeah. But they wouldn't let me sell on it because Sainsbury's had a kerfuffle with the Saudis over putting their alcohol online. So I resigned and I joined Ernst & Young. And EY, I was at EY during the dot-com bubble and ran the EY incubator here in London, and working with guys in Boston too. So that was fun. And that's where I got the bug for startups. And that's where we started developing what is now called the POEM framework, which essentially says there's a mechanism for identifying a startup, which is around the explosive growth rate that typifies them. Then the management consultancy of EY got sold to Capgemini, and I wasn't inclined to work with the French again. My father was already a French knight. So I moved from EY with my team, and we became the strategy practice for Sapient. Well, Sapient eventually got bought by Publicis for $3.5 billion. So that was good news. In the meantime, Africa came calling at the turn of the century, with Mandela and Obasanjo being the icons of that renaissance. So I was one of the people that tripped over to the continent and did all kinds of cool stuff. In Nigeria, I put in biometrics for payroll for the federal government, which people didn't like, and I got thrown out as a result.
Too much transparency.
Yeah. They were not amused that I found 20,000 ghost workers in the system.
That's what happens when you're doing too much of a good job.
I couldn't come back to England because I couldn't tell my wife I'd been beaten into hospital because of something I had done right. So I went to Kenya, helped Bokanga with the African Agriculture Technology Foundation. And then I also helped with the Biosciences for Eastern Central Africa, BECA, all on the ILRI campus off the Wayaya Road in Nairobi. So I spent a fair bit of time there with our historical links, because my late dad was Jomo Kenyatta's lawyer during the Mau Mau trial. So
wow.
It was good, reconnecting on that level. But Nigeria came back calling, and a friend of mine dusted off a license, and I became the chief operating officer for a mobile network operator. But again, we got too big, too fast. Because it was a data play when everybody was still trying to figure out 2 and 3G. We were doing WiMAX deployments. We got to about a couple of million users. And then one of the big boys decided he wanted our license. And when we wouldn't play ball, they sabotaged the network until we went out of business. And that's when I decided, you know what? I've had enough. Fortunately for me, at that time, in 2001, I'd invested in Strike Entertainment. Yeah, Media 24 came calling about 2008, and I couldn't believe it, but I literally got a 50x return on my investment on Striker. And that's what started me on the journey of angel investing, which is what I've pretty much done for the last, over a decade now, about 15, 20 years on different levels. As you were saying when you spoke earlier, I started out and still run the TVC Lab Syndicate, which is me and my friends from high school, some of them. But we then belong to the Lagos Angel Network, which I helped co-found and is now run by people like Kola Ino, Iya Boyaji, and an amazing team. And because we couldn't find networks on the continent, when we created LAN in 2015, we created the Africa Business Angel Network, ABAN, and I started tripsing across the continent. So from 5 networks in 2015, we currently have 68 networks with over 2,000 angels. So that's sort of the ABAN story. And because of our relationship with the European Business Angel Network, a few years back, I got invited to the board of the Global Business Angel Network, where I currently sit. And that's sort of pretty much how I got here. I trust that helps.
Amazing. You've given us a fantastic overview of your personal and professional achievements. I think one thing which we've not really discussed so far is, amongst your amazing achievements, you've recently published a book. So I was wondering if you could give us an overview of the new book, Investment-Worthy Startups, and how it aims to assist startups in Africa.
All right. Excellent question. If you remember, I'd said that I ran the EY incubator during the .com in Waterloo. And what had happened was we did a lot of research, around systems and construction of fast-growing systems. So when you have a startup, what defines a startup separate from an SME, for example, is an SME will focus on profitability at the beginning, right from the beginning. And they have a risk profile that is known because they're repeating a process that's been done before. Startups are built on innovation. That means it may be but nobody's done it this way before. So you have to invent the systems that will bring it to life. And that we then agreed at that point that there were 2 primary components to any commercial enterprise: the proposition of the enterprise and the organization that delivers it. And the combination of both is what constitutes the economics of startups, which is different to traditional economics. Why is that? Because you're measuring acceleration, you're measuring growth, you're measuring customer acquisition capabilities, you're measuring things that give you clear indicators that you have an innovative solution that will scale on your hands right from the beginning, because that's what we wanted to do at that time. Over the years, what has happened is I've refined the framework because of my interactions with literally hundreds of founders.
Yes.
And what we now have, okay, is what I've encapsulated in the book. And to actually crystallize the book, what I had done was run a program with my syndicate. I have a syndicate around TVC Labs called Mentor Pitch. I'll describe that later. But the critical thing is it validated that the framework, okay, was valuable enough for African startups to be codified in a book. So that's why I ended up, ensuring that it ended up in the book. And what does it say essentially? What it says is that for a startup, the beginning is the vision. If you don't have a vision, you really don't have anything to start with.
Okay.
So the question is, where are you trying to go? I call it, what's the destination? The vision is a vivid image, okay, that crystallizes with an image that you can articulate to carry others along. And when you talk about what constitutes really, when you say vision, what should really be the breakdown of a vision, if you want to put it that way? Well, your vision must be compelling enough to carry others along. You've got to be able to share it in a way that people get it. They may not get all of it. In fact, most of the time, they won't get all of it. The question is, can you articulate it in a way where it describes the destination that anybody wants to go to? So that's sort of the axis of it. It starts with the vision. What's inside the vision? The purpose. Why are you doing this? Core values. What makes you tick? Okay. In terms of beliefs. What's the mission? And what's the overall strategy? So that's what I call vision. And that's where it starts. If you can share that and we can see it, then what the book says and what the framework says is you can deliver that with a poem. What's a poem? A poem is a proposition that's delivered by an organization measured by the economics achieved as they traverse milestones, POEM. So the proposition is actually the startup's offer of products or services, okay, to a target customer base in a specified market. And I'll come back to that in a second. The organization are the startup's people, processes, and the technologies that deliver the proposition. And the reason technology is baked in is because we talk about scale, and I am yet to find any mechanism I know to reach 1 million people consistently on a daily basis outside of technology. The economics actually measure the startup's use of available capital for funding expenses to generate revenues that create impact. And the milestones then measure the startup's achievements, challenges, and targets as they go from, I used to say most minimum viable product, but I've become a fan of the expert dojo. So we're now looking at minimum lovable product all the way through to Series A. So
okay.
It identifies the core strategic areas for startup development. And that's what's in the book. So the book is broken down into the chapters that make up that framework.
Fantastic. So you've given great insight into the poem framework, but how do you believe this framework can specifically guide founders in successfully building a startup in an African context?
Well, the first thing is the book defines what a startup is and what it's not. So, just reading the first few chapters, you can tell whether you have a startup or an SME. So that's sort of the first aid to the founder. And if you do have a startup, then it breaks down, okay, the mechanism for you having an investment-worthy startup. How does it do that? It says, well, first of all, you've got to start with the market. It can never be bigger than your market. So which market are you traversing?
Yes.
And in that market, who's the competition? What's the regulation? What are the prevailing trends? So an intimate knowledge of your market is the start point. Now, understanding your market means you can go to the second stage, which is actually then having an understanding of the customer base. Let's go make you the money.
Yes.
Because they're inside that market. So it's after you understand the market and you get to know the customers, okay, who they are, what they do, how they do, how long they'll be with you if you get them, what they'll cost you to get them, et cetera, et cetera, et cetera. Then you start to think about what product am I offering them? 8 out of 10 times I meet founders, it's the other way around. Here's my product, here are the customers, and this is where they exist. But it actually starts with the market and then the customers, and then we go into the product. Why? Because we then have a context for understanding the product, design, development, distribution, and pricing, which makes up the business model on the product. So once we understand those three, that's the product, the customer, and the market, we know how you're going to make money. You know how you're going to make money. You can see it. Once that's clear, the question then becomes, who is actually going to deliver that proposition? Because it's a promise you're making. So who are the people that will own the company, that will run the company, that will work with the company, that will partner with the company, advise the company? Who are those people? That's the first thing you got to crack. Every single one of those roles and responsibilities, you need a name, a person, people for. Now, once you got people on board, the next question is, how do they get things done? What kind of processes are you going to use for governance? How about execution? How about logistics? How about operations? How about buying? How about marketing? How about talent management? How will you get things done? Once you've cracked that, you've got all the requirements you need for technology. So what technology are you going to use? What kind of architecture? What kind of security? What kind of user experience is it going to deliver? What kind of platforms? And all the questions around technology. Now, once you understand the people, you know how you're going to get things done, and you understand technology you're going to deploy, you've got pretty much the organization that's going to deliver the proposition. Now you have a proposition that can be delivered by an organization. The question becomes, how does it make money? This is not a charity. And that's where the economics kicks in. Because the economic measures the startup's use of available capital. Okay? So we talk about, it starts with family, friends. Well, it starts with the founders, actually, then their family, then friends, then fans, and some would add a fifth dimension, which are fools. But the aim is you start, okay, with those who know you, okay, because the next people on that chain of capital are people like us who are saying, okay, you got money from your dad. What did you use it for? Application of funds. So the capital and the application of the capital as expenditure is something that needs to be thoroughly understood, but most importantly, returns and expectation of returns. Okay, because that plays a big part in the valuation as we see down the line. So understanding all of that is the next thing is around the capital, but it's not just about capital. All right, you're deploying the capital, you're burning it as expenditure. And that expenditure, you're burning it with the expectation that you will generate revenue in excess of those expenditures, more than enough to yield a return, in our case, in multiples of what you picked up in capital. And what we then say is you're doing all of this while you're creating impact by creating jobs, by employing people, by helping the environment, and other impact your organization may be having. So the capital, okay, for funding expenses to generate revenues that create impact is what we call the startup economics. Now, you can't measure money in a vacuum. You measure everything as the startup achieves its targets over challenges and managing the risks and mitigating them as it does so to meet milestones like product market fit, to meet milestones like Series A or the next round of funding. And it is that framework of proposition, organization, economics, and milestones, okay, encapsulated in those steps that make up the understanding and the capability of any founder coming out and saying, yep, I know I'm investment ready and this is how I know, which is the objective.
Brilliant, amazing insight. Do you have any examples or case studies from your book that show how the POEM framework has been successfully applied by startups?
Well, it's very, very weird because originally the book was 400 pages. Then the publisher says, sorry, guy, nobody's going to buy a 400-page book, lose the case studies. So we've got a workbook coming out this year,
Brilliant.
Okay, based on the book that actually has the case studies in them, but actually then says, if, for example, we say we start market, how do I size my market? Well, you've got to know the total addressable, service obtainable. How do you do those calculations and all of that? It's laid out, I talk about it in the book, but then what the work does is actually a step-by-step where you can do it yourself with case study examples.
Look forward to reading that. Earlier, you emphasized in terms of understanding how you'll make money. In the book, it also emphasizes the importance of attracting funding from angel investors and VCs. So what advice would you give to startups who are looking for investment, specifically in the current landscape that we're seeing some economic challenges?
Well, make sure your basics are right. You've got to be sure you're a startup and you have the numbers to prove them. Okay, talk is cheap. Okay, the Dragon's Den pitch investment model is a nice television model. It doesn't work in reality. Nobody decides to write a check on a 3-minute pitch. No. It doesn't. Okay, we have something called due diligence, which all term sheets are subjected to. And that's the way angels and VCs, everybody in the investment world works. So the first thing is just be sure, okay, excuse my French, that your shit is tight.
Very much so.
Okay. Make sure the numbers work. You have the documentary evidence to prove anything. If you tell me I have 300,000 customers, I should be able to sample a couple of hundred of them. Okay. If you tell me your customer acquisition costs are $2, you must be able to prove it. Lifetime value is this. Whatever numbers you give, have the data to back it up. That's sort of the first thing. But the most important thing when you're looking for an investor is find one that fits. Not all investors fit everybody. Go look at their track record. What's this investor put money in before? Okay. What are they doing with the people they've given money? Are they helping them get to the next round? What exactly is their profile on investment? Okay. It's a two-way street because once you take their money, they're your partners. So you want to know as much as possible about an investor before you pitch them. What's their investment thesis? If they're a fund, where's the fund? Is it at the beginning of its life or towards the end of its life? You've got to understand the investor base thoroughly. In addition to running your business and having a kick-ass business that can touch 1 million people. And that's sort of, for me, the single question, they say if you have to ask one question, what do you are? Tell me how, you're going to sell 1 million people a day with your system. If you can't do that, then, let's have a different chat. I trust that helps.
You touched on a key point, which is understanding who your investor is in terms of how they operate, how they invest. So if you look at you, obviously you're an investor yourself. What would you say is the value that you add when working with startups on the continent? I think it's quite obvious to myself, but to the people listening?
Well, there are 3 or 4 areas in which I believe I add value. The first is I'm a mentoring sounding board. The founders in my portfolio feel comfortable enough. Oh, TD, I'm trying to do, so that's sort of the mentoring and the guidance, okay, is the first. And I call that, The second value add, okay, is and I mean it with all humility, okay, I do know tech. So even today, I'm giving a few prompt engineers some headaches with some of my prompting on GPT. So I bring the tech history, the tech knowledge, and the tech network also to the table. The third thing I bring is funding. I have a syndicate that invests. We did 4 transactions last year. We have a portfolio in excess of a couple of $100 million. So, but we run it through a very, very strict program in terms of investing. And last but not least is some would say I'm well connected. Last I checked, I think I've passed 10,000 followers on Twitter or LinkedIn or wherever it is you want to look on social media. Save for Instagram, where I'm a gastro terrorist. So be aware of that.
Fantastic. As you mentioned, you do know tech. So I was hoping you could potentially share some insights into how you feel or what you think the current state of the startup tech scene in Africa is as a whole, because we know we've seen a huge boom and then we've seen a recalibrating of the ecosystem. What do you think the current state is of the tech landscape on the continent?
Well, there's a tech landscape, then there's the startup scene. So we need to sort of separate them.
Yes.
But if I was going to look at the tech startup scene as a whole, okay, it's buzzing with exciting developments and challenges in equal measure, I might add. Okay, and I always like starting with the positives. Rapid growth. We've seen the rate of growth from 0 to 4.3 billion in 4 or 5 years, okay, doubling. We've seen the emergence of the unicorns, okay, and in fact, I'll be speaking tomorrow on how agri-tech solutions, they're exploding the agri-tech world on the continent, and you've got some amazing VCs leading that charge, and it's all being driven by startups. You've got what people now take for granted simply because M-Pesa, okay, is now so old, people just take it as infrastructure. But the mobile connectivity boom, okay, that's fueled mobile money and fintech is alive and well and driving other sectors.
Yes.
Okay, including agri-tech, like I talked about. If you look at what they're doing with MRVs and, some of the stuff that's going on now with carbon trading, you start to get the idea. Love us or hate us, we've still got a talented young population. Okay, we've got the rising tech generation of tech savvy. They've all grown up on mobile now. So it gives them an edge in constructing solution sets because they don't think mainframe or the legacy systems that are in the Western world. And finally, there's growing investor interest. Yes, there's a downturn, but the downturn is global. It's not African only. Okay, there's a global. And if you look underneath the skins, you see that the latent interest in Africa is still persistent enough to the level that I actually started a new company last year to address that. But having said that, there are challenges, uneven growth. Okay, funding and success tends to concentrate on the diamond, if you know the big four as we talk about it. Although from what I'm seeing from Africa Big Deal now, that it's sort of balanced and all the four are equal, east, west, north, and south. But by and large, the smaller countries aren't getting a leg in. There's a talent gap. Okay, skilling of the workforce and retailing talent is becoming, especially in my home country, Nigeria, we call it Japa, where we've seen a mass exit of talent into the West, especially Canada and the UK. On top of that, we've still got limited infrastructure. Inadequate internet access. Every time I talk to my people, on content, there's one problem or the other with internet access, unreliable electricity. Okay. Those are things that are hampering scalability. Then regulatory hurdles. Yes, we managed to get the National Startup Act passed. Clap for us. But there are complex and inconsistent regulations that are stifling startup growth and investment into them all across the continent. And that's why access to capital, okay, remains limited, okay? And later stage investments are international or nothing. It's rare. We don't have yet late stage. We've got a growing portfolio of venture capital on the continent, and I'm happy to see that local growth. But in terms of later stage investments, we're still totally reliant on international partners. And I want to end on a sore topic that, it irks me, it annoys me, it pisses me off, and I can't wait for us. No, seriously, we've got to do something about it. It's latent and inherent in our cultural heritage, but we've got to get over it. Female entrepreneurs face significant barriers in accessing funding and support. We're
Very
at
true.
2%. 2%. Who does that?
Very true.
So those are the challenges as I see them. I trust that helps.
100%. You highlighted a key point, which is the JAPA phenomenon. What impact have you seen it have on the startup space, maybe specifically in Nigeria?
The migration of talent, it's a complex one. Why do I say that? It's almost 6 of one, half a dozen of the other. The negative impacts, we've got the brain drain. We're losing skilled and experienced workers, especially in tech-related fields, because those are the ones that can actually get the jobs, and that's creating a talent gap. It's making it harder and harder and harder for startups to find qualified employees, and that is hindering innovation. The second thing it's doing is it's increasing hiring costs. You can imagine, let's just say you've got a pool of 100 experts, 20% leave the country, you got 80 left. That remaining talent pool is going to drive up salaries and make it more expensive for you to hire people. And then when talented individuals leave, guess what? They take with them valuable knowledge.
Yes.
And not just knowledge, the networks they've built around themselves over time. And that is a challenge to replace. And so with less talent available locally, startups are being forced to shift their focus from serving the Nigerian market to targeting international markets, potentially neglecting domestic needs, especially given the devaluation of the currency too also. But like I said, for every downside, there's a positive side. That's how I live. That's how I look. Nigerian migrants are sending money back home, which is being reinvested. I just about an hour ago, I just got off from a potential syndicate member who's out in Spain. He's working in Spain, but he's co-investing with us in Nigeria. They also get global exposure and connections. So they establish valuable connections with international investors. And like I said, it was double-edged. We also have the reverse happening now, where we're getting a reverse brain drain. Some of the highly skilled, people are returning to Nigeria. Take an example of the current minister for innovation and digital economy, Bosun Tijani.
Yes.
Bosun was out in Leicester.
Yes.
He's back in Nigeria, and it sort of typifies it. So overall, the impact of JAPA is a mixed bag. While it presents challenges for Nigerian startups in terms of talent shortage and knowledge drain, it also offers opportunities for increased investment. Like we've got the Diaspora Angel Network as an example of that. And the long-term effect is going to depend on how effectively our government and the startup ecosystem adapt and address the changing landscape.
If we go back to the book, what impact do you hope the book will have on the startup space?
Well, my aspiration is that it will start to give us, at the risk of sounding naive, a standardized approach to assessing startups so that we can start to get cross-border investments, as we've demonstrated can be done with the Catalytic Africa platform. Because it's critical, that we find a way to make international capital available to our local startups in a way that is led by the local angels. I'm very, very keen on the local investors being in the leadership position of startup investment, then supported by international investors, rather than what has happened, which is what has caused the crash, where they came by themselves and started engaging with the startups directly, and half of them have lost their shirt. I hope they learn from it, but who knows?
Interesting. So, David S. Rose, who is a seasoned entrepreneur and angel investor, I saw that he praised your book for its potential to help build funded startups. Is there a specific aspect of the book that you would say set it apart in providing valuable guidance to create funded startups?
Yes, I think it's the holistic nature of it. Okay. And the fact that it borrows from Barbara Minto's pyramid principle, which is you start with 5 points. What's your vision, proposition, organization, economic, and milestones? Okay. Once that's at the highest, if you get my point, of levels, then you can drop down to the next, which we call the topical levels. So, what's your purpose of the startup? What are the core values? What are the beliefs? So that's the next level down. In terms of proposition, it's about the product, the customer, and the market. Organization is the people, the processes, and the technologies. And then you can drop down to the next level in each of those. So in customers, you can look at, demographics, psychographics, acquisition, value, et cetera, et cetera, et cetera. So it's the fact that it starts at the simplest of levels and it allows you to build as you go along. So it's how we are. So we're born as kids, we learn a few sentences, and as we grow older, we continue to flesh out. And that's why it's a framework, okay, as opposed to anything else. It allows you to populate it as it affects and as it's referenced to you. So it's the customization, the customizability of it based on its simplicity once you get it. That's what makes it powerful.
Brilliant. So I guess keeping on the theme of books, I know this isn't your first foray as an author. You had a previous book published, was it in 2014, The African Project Manager?
That's correct.
Yeah, you discussed your goal-oriented approach to project delivery. So, how do you think this approach aligns with the challenges and opportunities faced by startups in Africa?
Well, here's my thinking. If you don't know where you're going, then any road will get you there.
Yes.
So again, it boils down to the framework. First, it starts with a vision. Once you know what the vision is, all right, my vision is to build a 6-bedroom home, okay, on a hill where I can oversee the city. I want to be sure that I have enough space for at least 4 cars. And I want to have a private approach that is at least half a mile long so I can see who's coming to visit. Did you get a picture of the house?
Very much so.
Exactly.
The book was published in 2014, so do you believe the approach is still relevant 10 years later?
Very much so. I still use it, and my team can attest to that. Because what I did, okay, I had the privilege of being certified by both the American and the UK project management bodies, who are constantly at each other's throats, for the want of a better word. But and what I did was I abstracted what I call the essence, okay, of project management. Because at the end of the day, what's project management? It's just using limited resources to achieve a goal. That's it. And what are you trying to do building a startup? Use limited resources to achieve a goal. So the principles apply, which means you've got to think through what's the goal, what's the objective, okay, what are the activities that gets me from here to there? Knowing where I am, it starts with where you are today, and then you plan it out. And that's why you see we talk about milestones.
Thank you for sharing that knowledge. So with your extensive experience and knowledge in helping companies expand into Africa and in Africa, what would you say are some of the crucial considerations for businesses that are looking to successfully operate? Let's take Nigeria as an example.
Well, I'm on record on this one. Get a local partner.
Yes, I agree 100%.
Okay. And once you've done that, then the standard things apply: market research and strategy, regulatory environment understanding, logistics and infrastructure, human resources, require business relationships. Yeah. But the key thing about Nigeria, be patient and persistent. Okay. Doing business in Nigeria takes time and patience. Don't expect overnight success, and be prepared to overcome challenges. You've got to be flexible and adaptable. Okay, adapt your plans and strategies as needed to fit the Nigerian market because it's a country with immense potential for business growth. Okay, and by carefully planning and adapting your approach, you'll be amazed. You can achieve that success. Others have and continue to do so.
Thank you for that. You've given great advice today, which is in keeping with what you do as an investor and also advisor. How do you balance your roles as an investor and advisor, or are the two roles not mutually exclusive?
They're not. I have the advantage that, like I said, every time I say I'm retired, people say, they don't believe me.
They're not listening. So how many times have you retired so far?
Yeah, you're retired, but TD, you did 21 cities in 14 countries last year.
Wow.
Is that retirement? So I think it depends on where you originate, what exactly you're about. Do you understand?
Yes. So would you say this approach is common globally across the startup space, or something that is more in common with our culture, African culture, in terms of advising and taking this role on?
Let me, because your audience will be listening. I didn't invent it. There's an organization called Founders Institute. And you might want to look them up. They actually have something called the Founders Advisory Standard Template, okay, for providing advice for shares. Standard template. This is how you do it. This is what you do. So that's not new. Investing in syndicates, I learned that from the best. I'm glad you mentioned my mentor, David S. Rose.
Yes.
And mentoring, is something we all do as senior professionals. So I do all three. My advisory is typically and mostly to founders I've already invested in. My mentoring is for everybody. That's the difference. Because with advisory, I do research, I do the work to be sure I'm giving proper, sound, strategic advice. And, because remember, I used to be a consultant.
Yes.
So, I put the effort in so they know, yes, this is value for shares.
Amazing. So I guess if we take a few steps back in terms of before you advise and mentor people, looking at how do you actually identify or build your pipeline of promising startups that you're potentially interested in investing in?
Well, I now have a privilege that increasingly founders find me.
Yes.
But historically, I have an ecosystem that I've always worked, okay? And I still do to a very, very large extent. So academia, for example, once or twice a year, I show up in quite a number of our local universities, or my people show up. So in fact, for years, I taught at the Pan-Atlantic University's Enterprise Development Center. I've got a strong relationship with Covenant University. One of my startups has just signed an MOU with them just yesterday. So academia is one. The infrastructure providers are the others. So I helped actually put together something called the Innovation Support Network in Nigeria, which is a network of over 150 innovation hubs. In fact, I was the founding chairman for that. So that's on infrastructure. On policy and regulation, we have very good relationships with the regulators. I actually chair the Lagos State Science Research and Innovation Council's Innovation Committee, and we have very strong relationships with the Nigerian Information Technology Development Agency, for example. Then on media, we also have very strong relationships, apart from the fact that we are investors in Big Cabal Media, who own Tech Cabal and Zikoko, that are dominating media space. We also have strong relationships with CFA Media, TechPoint, Disrupt Africa, Brighter Bridges, and a whole host of others. Then on support services, we work with development partners like GIZ, Tony Elumelu Foundation. Tomorrow's speech is with the ITC, UK Nigeria Tech Hub. And last but definitely not the least is on funding. As I said earlier, I'm a co-founder of the Lagos Angel Network, but we have partners from Alethea Capital to Echo VC. I chair the CC Hub Syndicate. There's the Bank of Industry. We work with Venture Garden Group. There's a whole host under the funding umbrella. So it's that ecosystem that we operate inside of. I trust that helps.
As you said from the beginning, people tend to find you now. So for the people who are looking to find you, I guess, as a legend and as someone who is extremely well respected in Africa's startup space, what advice would you give to young entrepreneurs looking to embark on their startup journey in Africa?
Be sure you're solving a problem that people care about. Because if you are solving a problem that really matters to people, you'll get that startup built. Because you'll just find that there's a way the universe will conspire in your favor to get it built.
Amazing, amazing. Very profound words. Be sure that you're starting a startup or business that people care about. So from your experience, what current trends or what startups are being started that people care about are you seeing that you're currently excited about?
Now that is a loaded question because I'm always...
You might be giving some trade secrets away.
No, not at all. I mean, we're looking for more people. Guess what? If there were 1,000 of me in Africa today, we wouldn't be enough.
Very true.
So that's sort of the reality, for me, the reality of it, okay? But for the angel investors, other investors, and startup founders listening, fintech still reigns supreme, but with a twist, okay? While fintechs, they're going to remain dominant, there's a shift towards embedded finance, okay? So it's about offering financial services in existing platforms like e-commerce or social media. That's what's happening with fintechs. And buy now, pay later, integrated into online stores or micro insurance with ride-hailing apps, you get the idea. Yeah. So that's sort of the first. I did tell you I'm talking tomorrow about this. Agri-tech is taking center stage. As food security concerns rise,
yes,
innovative solutions for agriculture, they're just coming out of the woodworks. Okay, startups are tackling everything from precision farming tools powered by AI to logistics platforms connecting farmers directly to consumers. Okay, we're talking of drones monitoring crop health or mobile apps helping farmers access financing and resources. They're all there. And then, of course, again, I'm a bit biased based on my portfolio. So, anybody listening, chances are if I'm laying this out, it's because I've looked at it because of one or more startups in my portfolio. So if you look at Agri-Tech, Soji, Soyolu, and AirSmart and what they've been doing, immediately kick to mind. If you look at clean tech, which is becoming a powerhouse,
definitely,
okay, because of environmental challenges, okay, in fuel and a surge in startups, renewable energy, waste management, sustainable. These are all key areas, okay? Solar power subscription services, biofuel production, they're all gaining traction. I have a startup, for example, that is making smoke-free cooking stoves that use pellets, okay, that are, guess what? Carbon positive. So all of a sudden, the women are using the pellets and we're getting carbon trading going. And then also, I mentioned earlier that if you remember, I said the investment is focused on the diamond. That is Egypt in the top, Nigeria on the left, Kenya to the right, and South Africa downstairs.
Yes.
Other countries starting to rise fast. Ghana, Senegal, Rwanda. They've all got vibrant ecosystems attracting investors and they're showcasing diverse talents. So we're talking of things like hyperlocal solutions for hyperlocal problems, startups catering to specific needs within communities, from delivering fresh produce in rural areas to offering digital healthcare services in underserved regions. Okay, this hyperlocal approach, also ensures that the solutions are tailored to the unique challenges and opportunities of each context, which is what I was alluding to earlier. Then, of course, I'd be remiss without talking about the emerging technologies on the horizon. AI, blockchain, cybersecurity, they're all finding their way into various sectors, from healthcare diagnostics to secure online transactions. Okay? These advancements are further diversifying the landscape. It's getting really, really diverse out there, and funding continues to grow in spite of the uncertainty and all of that, But I'm expecting we'll probably hit 5 billion this year. And that's not saying challenges don't exist. I talked about infrastructure, talent, and all the other things earlier. So they are there, but I'm saying in spite of, that's what I expect to see.
Brilliant.
I hope that helps.
Yes, 100%. As you said, fintech remains supreme, but we're seeing an emergence of agri-tech, also environmental-based and hyper-local approaches, which is exciting and good to hear. So if we go past current trends, look at the future, maybe we look specifically at Nigeria. Where do you see Nigeria's startup space in the next 5 years' time?
Well, given what the government's trying to do, I expect to see a new crop of startups start to emerge in the 3 to 5 year window in Nigeria. Because, as I said, growth of mobile technology is going to continue to enhance services, okay, whether it's at the consumer level or at the corporate level. And solutions that, like we saw what ride-hailing did.
Yes.
As a solution. So it's those kind of solutions that are pervasive and multivariate in nature, which I see more coming out of agri-tech, like I mentioned earlier, are going to be, the things that dominate. I can see AI, IoT, and blockchain, for example, accelerating innovation in farming and agriculture. But at the same time, I can see them doing the same thing with healthcare and remote healthcare management. But then, like everybody says, I'm a techie, so I'd expect tech to do, but that's the reality. What I find that what excites me about going forward is the fact that I think with the voluntary carbon market, we're starting to see potential for us to start to drive additional income on the continent through farmers and others to offset international corporate emissions. So, yeah, interesting things ahead.
Exciting. So if we look closer to home, where do you see yourself in the work that you'll be doing in 5 years' time? Are you going to take that retirement, or are you still going to be traveling multiple countries?
Oh, no. The traveling stops this year. Well, he says that as he jumps on a plane next week. But I'm slowing down on the traveling. I'm going to focus more on two legs I'm focusing on. The first is called Mentor Pitch. Mentor Pitch is a program we've developed that's based on the book, and it helps angel investors and startups come together in a system that allows both to interact, and even if an investment is not made, both get something out of it. For the angels, it's a due diligence process based on the book. For the founders, it's a mentoring process based on the book. And the destination of the program is a digital data room that is positive proof of investment readiness. So I'll be pushing that. And the other part, like I told you last year, we started the Zytec Investment Office. I told you we've got a couple of thousand angels on the continent now. What's Zytec? Zytec only has one question. If you have a startup you want to exit, talk to us. We're the exit company. So that's what we're focusing on, is getting exits by providing them as secondaries to international investors.
Brilliant. Thank you for sharing that, TD.
Quote of the week.
As people, we often have quotes, mantras, African proverbs, or even affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
Oh, you are going to regret you asked that.
Please do share.
The maxim that I learned when I was 10 years old and has stood by me all my life is called Desiderata, and it's by a gentleman called Max Ehrman. And what Desiderata says is this. Desiderata says, go placidly, that is quietly, amid the noise and the haste. And remember what peace there may be in silence, as far as possible, without surrender. Be on good terms with all persons. Speak your truth quietly and clearly, and listen to others. Even the dull and ignorant, they too have their own story. Avoid loud and aggressive persons. Do you know why? They're vexations to the spirit. Now, if you compare yourself to others, one or two things are going to happen. You're either going to become vain or bitter. For always, there are going to be greater and lesser persons than yourself. Enjoy your achievements as well as your plans, and keep interested within your own career. However humble, it is a real possession in the changing fortunes of time. Exercise caution in your business affairs. Why? The world is full of trickery. In Nigeria, we call it 419. But let this not blind you to what virtue there is. Many people strive for high ideals, and everywhere, life is full of heroism. So, beyond a wholesome discipline, be gentle with yourself. Be yourself. Especially, do not feign affection, but then neither be cynical about love. For in the face of all aridity and disenchantment, it is as perennial as the grass. Take kindly the counsel of the years. That's what I'm doing by stopping all this flying around. Gracefully surrendering the things of youth. Then nurture strength of spirit to shield you in sudden misfortune. But then don't distress yourself with dark imaginings and fears, because many fears are born of fatigue and loneliness. Look, what it's saying is, beyond a wholesome discipline, be gentle with yourself. You are a child of the universe. You are no less than the trees and the stars. You have a right to be here. And whether or not it is clear to you, there's absolutely no doubt that the universe is unfolding as it should. Therefore, be at peace with God. Now, that's whatever you conceive him to be. And whatever your labors and aspirations in this noisy confusion of life, keep peace in your soul. Because with all its sham, drudgery, and broken dreams, it's still a beautiful world. Be cheerful and strive to be happy. Thank you for listening.
I don't think we could have ended in a better way. What an amazing way to end today's conversation, TD. I'm lost for words, but thank you for sharing that. That was beautiful.
You're welcome.
Amazing. For everyone listening today, any closing remarks, final calls to action, where they can find you if they're interested in finding out a bit more about your work?
I live on social media. You can find me Twitter, LinkedIn, Facebook, TOMIDEE, Tomi D. That's my mantra. Home base, tomidavis.com. If you're an angel, come find us. TVC Labs, that's TVCNG. Whole host of things. Just put in Tomi Davis, and on the internet is your friend. You will find me. I look forward to connecting with you. Thank you very much for listening, and God bless you.
Thank you, TD, for joining us today and sharing your insights and extensive experience, which has provided extremely profound understanding of the challenges and opportunities present in the African startup space. And also, for anyone who hasn't already, please go out and get yourself a copy of Investment Worthy Startup, which is a truly valuable resource for founders who are seeking to build successful ventures and, as we've discussed today, attract funding. So yes, brilliant conversation. I've thoroughly enjoyed it, and it's been an absolute pleasure having you on the podcast.
Thank you very much. I hope it was worth the wait.
It was definitely worth the wait.
You take care. Bye.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.